What's your background?
Hello, I'm Paroma Chatterjee. I have spent the last 2 decades in financial services in India, post business school at IIM. Then back in 2007, I joined Kotak Mahindra Bank to be a part of the team to launch the cards business for Kotak, launched and scaled that. And then in 2010, I joined Airtel Money, which was the cusp of fintech innovation in those days, to launch the first mobile wallet in India. Was part of that team and scaled that for a good 5 years before coming to Bangalore to join an interesting e-commerce startup at that time called Flipkart to set up the marketplace business for them. And while doing that, I realized the kind of working capital challenges that marketplace sellers faced while listing their product and selection on e-commerce platforms, and joined a very interesting digital lending startup focused on SME working capital lending called LendingKart to lead and scale their business. Scaled that business for a 3-year period to about 3,000 crores. And then 4 years ago, I joined Revolut as their CEO for India to set up the India operations. And that's what I'm doing right now as I speak with you.
What does Revolut do in short?
Revolut is the world's second largest fintech. It is a digital bank, actually. It has presence across 44 different countries, valued at $45 billion, and it offers all banking and financial services in a completely tech-only manner. Revolut has banking licenses in the UK, which is in principal authorization equivalent, which is called AWR in the UK. It has a banking license in Europe under the ECB, and it has been recently granted a banking license in Mexico and in process in Australia as well. So wherever we have banking licenses, the entire suite of banking products are offered to customers digitally. And in other places in the world, we have what is an e-money license, which allows us to be a payments operator in both domestic as well as international currencies around the world and issue cards as a form factor along with the app. And we're also into lending and trading in different geographies.
Can you break down what a payment value chain looks like, or what are the various components in a payment solution?
The payment value chain is vast. You can approach it from two lenses. You can approach it as a fintech, which is basically offering different payment solutions in a tech-enabled manner. Or you can approach it as a tech fin, which is the exact counter of that, which is creating technology solutions to power other companies which are already doing things in the payments value chain. So let me talk about it first from a fintech orientation. Within fintech, it becomes payments tech, under which I can describe the value chain. Now, there again, there are two different cuts. One is a B2C or a retail consumer cut, and the other is a B2B or a business or an SME cut, because the payment needs of an individual are different from the payment needs of a business. So let's come to the payment needs of an individual first. And there, let me give the banking context and then the payment tech context, which will make it clear. What's a bank account as far as a retail consumer is concerned upfront? It's nothing but at the heart of it, a store of value. Customers keep their money with a bank in what is called a bank account. At a very basic level, that's the core product in banking. Cut to the payment tech side of it. What is the core store of value in a payment tech? It is actually a wallet, which is, in terms of regulatory parlance, a PPI wallet is what is your payment tech wallet on this side, which is a stored value. What's the difference between these two? On a bank account, you can offer interest. On a payment wallet, you cannot offer interest. A bank account, you can keep unlimited amount of money. In a payment wallet, there are limits on the amount of money that you can keep at any point of time or send out of it or receive. And the third difference from a company lens is a bank can deploy whatever deposits it has gathered from customers in its own way. Whereas in a payment tech scenario, whatever deposits are mobilized for consumers in a wallet still need to be kept in the form of an escrow or escrow banking with a bank. That's at the heart of it, the genesis of the starting of the entire value chain of payment tech with a wallet, where the funds therefore need to be kept in an escrow and escrow management. Now come to the second thing. After you've kept your money deposited in a payment wallet, what is the next thing you're looking for? How to access that money, how to use that money, right? In a banking scenario, how do you do it? You go to a branch or an ATM, you withdraw it as cash. That's one option. You write checks or demand drafts for the balance that you have in your account against that, which has to be deposited and cleared. Those are the first two, which are pseudo offline options. And then comes the tech-enabled for banks as well, where you access your net banking or you access the mobile app of a bank and you transfer money through routes like NEFT, RTGS, or today an IMPS. Now cut to a payment tech. Sorry, I missed one important one, which is a debit card. That's the card as the other form factor, which is issued to you against the bank account balance, which you can use to make payments at a merchant, and your amount gets debited from that account. So the second part of a payment value chain is the access channels. Now coming to the access channels in a payment tech context, it's the same thing. There's no difference. You issue a card which is linked to a wallet. In a payment tech scenario, it becomes a prepaid card where the amount that you have loaded in a wallet, it gets used whenever that card is presented at an offline or an online merchant to process and support a transaction. And the second, which is by far the more popular, is UPI. You enable UPI on any of these wallets with your own handle or through a third-party handle, and you can use that to make payments from the wallet that you hold. So the second leg is these access channels, which is across card and IMPS or UPI as primary form factors over there in terms of enabling switching between these transactions to ensure money seamlessly flows in and out of these wallets and these accounts. Now coming to the third leg, which is after you've created a value around this, in order to offer additional benefits to customers. What does the industry do? It offers rewards. It could be cashback, it could be points, etc., etc. So the third leg in payments is also creating payments loyalty and rewards and creating platforms around that. That's the third leg in the value chain of payments. Now that is at an overall level from a consumer lens. Now cutting to the B2B or the business lens. Business lens, the payment value chain, if you look at the three main things that a business requires. It requires receiving payments. A business needs to receive payments more, and that comes from doing a payment aggregation or a payment gateway. So creating a payment gateway, enabling businesses to receive payments from all the various access channels is one of the components of the B2B payment chain. The second is cash management solutions. Cash management and settlement, which is once a business has received payments, how do you manage and reconcile all the payments overall in your own business and your own ecosystem? So cash management becomes the second part. And the third part becomes invoice management overall, where invoices are presented to you and you need to make payments against those invoices. So those would be the three main things in the payment value chain from a business's point of view. So that was the consumer and the business point of view. Now coming to technology point of view, this was the fintech or payment tech angle. If you have to take the tech fin angle, which is technology that can power each of these legs. So technology can power any of these, either by companies taking their own licenses and powering it themselves and serving customers, or by just pure play creating the technology as a SaaS platform or as a B2B SaaS platform and making it available for other companies who have the license or the product to actually be able to offer it to customers better. An entire account management platform, a card management platform, a reconciliation platform, etc., etc. So all of that can be offered as B2B SaaS services. And if you're looking at it from a B2B SaaS lens, the other opportunity there in that value chain is embedded finance. Because finance is needed. Payments is at the heart of consuming anything. Whether you're buying something from an e-commerce website or anywhere else, you need payments to be embedded. You need consumers to be able to pay for it. So embedding these kind of finance solutions into other industries, whether it is e-commerce or food tech or travel tech, etc., is the other angle of using tech in payments.
Now, if we zoom out, right, is the payments landscape saturated, and where do you see the opportunities or even frictions in building a payment startup?
Saturated, no way. You obviously hear about all of these data points about the 14 crore transactions that are happening on UPI every month, etc., etc. These are obviously mind-boggling figures. But if you look at the other side, okay, yes, there are 500 million Indians who have UPI. But how many Indians are there in all? We're pushing towards 1.6 billion, right? Out of that, therefore, even out of the adults, you still have 300 to 400 million adults who are eligible, who are still not using UPI, right? The second, if you look at it, even in India, one of the things that has enabled this massive growth in the last decade is the growth of smartphone penetration overall in India. But there are 200 million phone users who are still not on smartphones, right? Compared to India numbers, 200 million may be the smaller one. But if you look at it as a global context, 200 million by no means is a cohort that we can afford to ignore. So people who are still not on smartphones, people who are senior citizens, within senior citizens there is less than 30% penetration of digital payment products, right? Then you have another entire section which hasn't been thought about yet, which are people with various different kinds of disabilities. On another side, you have women who are joint account holders to some other man who's a primary account holder. They have an Aadhaar. They can have a mobile number linked to the Aadhaar. But how to access financial services on their terms and be the primary payment operator? These are all problem areas still left to be solved, where I think the entire 1 billion population of India, which is eligible to be making payments, should be making payments digitally. And that's the vision that we as an industry need to strive toward.
And what are a few revenue streams that payment tech startups can look at?
Revenue streams, so that's the other million-dollar question. What has happened with the democratization of UPI is people have started to believe that payments comes for free. Now, while for customers, it has made sense for customers and small merchants, the whole UPI, but UPI is not, as we discussed, the be-all and end-all of payments. One particular space, think about it, cross-border. We have spoken about doing all of this, the ease with which you can send 500 rupees for a nephew for their birthday anywhere in India using UPI today. If that nephew were to be overseas, can you do the same thing with the same ease, send $50 over? You cannot today. So there are different types of transactions, whether it is cross-border or whether it is loans. Loans is still severely underpenetrated in various segments, particularly SMEs and women. In each of these spaces, if somebody manages to design a high-quality product which solves for convenience, solves for efficiency, solves for digitization, and solves for overall affordability, there is money to be made by the company over there. Since we were talking about the cross-border space, do you know how much it costs to send money overseas today? It costs anywhere between 3 to 5%. Leave aside the documentation and the time taken to process. It takes 3 to 5 days to process an overseas transaction. Do you know statistically last year, the number of Indians who traveled overseas, how much they spent? They spent $42 billion overseas, Indians who traveled abroad. And out of that $42 billion, close to 50% was purely in cross-currency conversion and markups. That is how that industry is. Now, if you're able to solve for that, obviously a part of that can become the revenue stream for the company that is solving for it. So yes, these are the kind of areas, cross-border, where I definitely see revenue opportunity. Lending, there is definitely revenue opportunity. And the other is in bundling of services. Like a lot of people take Netflix, Amazon Prime subscriptions, etc., subscription models, where they're willing to pay a premium to get access to a bundle. In financial services, I don't think as an industry we've done that yet, to be able to pool together a suite of offerings together tailored to an individual and ask them to pay some kind of a fee for that. I think customers would be happy to. That happened in cards, credit cards industry. It became a free card in the early 2000s, which saw scale, and then it moved to a paid card market, where the cards started offering value to the customers and customers were willing to pay. So it's not that customers are always looking for things for free. Customers are looking for things at value, at the right value. So as long as you provide value, I think you can command a premium, and it's important to do so because it's important to have a sustainable, scalable, profitable model as you build a company. Otherwise, you're just dependent on investor